The Trump administration insists tariffs aren't going anywhere, but will they chicken out? The so-called taco trade, standing for Trump always chickens out, made the headlines last week after a fairly muted market reaction to tariff news. This Monday, it's steelmakers that are in President Trump's firing line after he announced a doubling of tariffs on steel and aluminium late on Friday, while China says the US has breached the two countries' trade truce. Joachim Klement is head of strategy at Panmure Liberum. Joachim, steelmakers have sunk today on the back of this latest threat, but should shareholders take the Trump administration seriously?
We think that, unfortunately, as the so-called taco trade becomes more viral, it becomes more likely that Trump will stick to higher tariffs just to prove a point. However, at this point in time, the increase in steel tariffs is not something that seems imminent because it's only been mentioned in social media posts and in a campaign rally, which is very different from signing an executive order.
If this 50% duty were to kick in, though, how serious is that for European steel?
It would be quite serious. It would obviously be most hurtful for Canadian steel, but European steel companies would also suffer quite a bit. However, there is, at least when it comes to 2026 and beyond, some relief on the way with the fiscal stimulus from German infrastructure, which will increase domestic demand for steel in Europe.
The tone is also getting heated again between the US and China, it seems. China says the US has breached the trade truce, and the US says China is still blocking essential exports of rare earths. Is that brief trade peace already collapsing?
I think it's going to be a back and forth and up and down with the moods swings constant between China and the US. And that is indeed the major issue about this entire trade war situation. The uncertainty is so high that most businesses find it difficult to make major investments, given that we don't know what's going to be happening in a year or 2 years from now, let alone even longer.
How significant are these rare earth exports that the US says are being blocked for car makers, for example?
They are very significant, in particular for EV makers like Tesla. They're also quite significant for windmill and wind farms and other renewable energy projects. So they are meaningful, and obviously China controls the market with more than 90% of capacity at this point in time. However, more and more countries are opening up mines of rare earths. Australia and the US have working mines that can alleviate some of the shortfall. Finland and other countries in Europe are trying to follow through.
Back in Europe, Joachim, the ECB of course sets rates on Thursday with a cut seen as certain, but the euro just keeps rising, doesn't it? Is that going to be a problem for the central bank?
It is going to be a problem for European exporters because it reduces export demand even further and creates a weaker economic growth picture, forcing the European Central Bank to cut even faster. Now, the problem that we have is that international investors are rebalancing their portfolios away from the US dollar and are using the euro, but also currencies like the Swiss franc and the Japanese yen as diversification to the world's reserve currency. And that is likely to continue for the coming 12 to 24 months.
Given that, what kind of guidance for the future are you expecting to hear from the ECB this week?
I think it's going to be the usual about data dependency, etc. But I think the ECB will make it clear that they're standing ready to cut and to cut throughout the rest of this year to support the economy.
That was Joachim Klement of Panmure Liberum. Don't forget, you can watch more videos on Reuters.com.